Hello again, and welcome back to the ASEAN Fintech Forum. We're already around the halfway point, so time flies when you're having a lot of fun, right? For this next session, we'll be learning about the state of crypto in 2021. Panel discussion featuring Bobby Yong, co-founder and COO at CoinGecko, Alex Svenovic, co-founder and CEO at Nansen, and Nauman Mustafa, CEO of Coins.ph. These are the speakers, and their discussion will be moderated by Andrew Francis, the head of startup ecosystem ASEAN at AWS. Without any further ado, Andrew, over to you.
Welcome to the FinTech Forum. We've got a really exciting panel today, and we're going to talk about all things DeFi, decentralized finance, and non-fungible tokens, NFT. So I'm Andrew Varanges. I lead our startup ecosystem business here at AWS for Southeast Asia. And we've got plenty of content, so let's just get straight into it. We'll kick off with a round of introductions. Can we start with you first, Bobby?
Yeah, sure. Very happy to be here. My name is Bobby. I'm the co-founder and COO at CoinGecko crypto data analytics platform.
Welcome, Bobby. Next over to you, Alex.
Hey, I'm Alex Svenovic. I'm the CEO and co-founder at Nansen, a blockchain analytics platform. Very happy to be here, Andrew.
Yeah, great. And congratulations on your recent funding announcement as well. Awesome.
Thank you very much. Thanks.
And last but not least, Naaman.
Thanks, Andrew. Appreciate it. Hey, guys, I'm the CEO of Coins.ph. We are a blockchain-powered wallet service in Philippines. Thanks again.
Great. Let's just jump straight into it. Right. So, Bobby, over to you. Can you talk to us about DeFi and what is it?
Yeah, DeFi is basically short for decentralized finance. What DeFi is that it's really a movement that allows users to utilize financial services such as borrowing, lending, and trading without the need to rely on any centralized entities. These financial services are provided via decentralized applications on a blockchain network. Majority of them are deployed on the Ethereum network, though this is very fast changing with decentralized applications being deployed on other blockchain networks such as Binance Smart Chain, Polygon, Phantom, Solana, and so on. We are seeing many Ethereum-based DeFi apps growing their user base on all these things. So in a nutshell, DeFi is basically decentralizing finance, and the pace of innovation is mind-blowing with this permissionless innovation that is happening now.
Yeah, and it sounds like this is happening on a lot of chains as well. Like you mentioned quite a few chains there, Bobby. So Alex, over to you. Some of us have heard this term DeFi summer. It'd be great to kind of dig into that. And, second part of the question, if you could just talk a little bit about traditional finance in a comparison to DeFi and, anything that you're working on specifically at Nansen.
Yeah, absolutely. So DeFi Summer was basically kicked off, you could say, when Compound, which is a money market platform within the DeFi ecosystem, started distributing their governance tokens. So these are effectively tokens that let you vote on changes that you can make to the Compound platform. This created a lot of inflow of capital and liquidity into the Compound protocol. And very quickly, other protocols started creating similar distribution schemes. And this was referred to as liquidity mining, or more colloquially, it's referred to as yield farming. And effectively, this happened at the beginning of the summer last year in 2020. And it kind of kicked off a craze where a lot of people started investing and putting capital into decentralized finance, participating in many of these yield farming opportunities. One very famous one was also Yearn.finance, or with the Wi-Fi token, which famously distributed all of its tokens over the course of a week. So this has been a really big kind of catalyst for interest from investors in the DeFi space. And as you asked about the difference between traditional finance and decentralized finance, I think there's a lot of stuff to talk about there. I would say some of the keywords that Bobby mentioned are very important. Permissionless is probably a key word to note here. If you want to create something in the fintech world more generally, or the traditional finance world, you typically need permission from someone to build on top of their product or platforms. You need to get an API key, for example, or you need to get the permission of a bank to integrate with their platforms. In DeFi, you can actually build permissionlessly on top of other projects because everything's open source and everything's governed by smart contracts. So that's one very important thing. The other keyword is, of course, decentralized, which comes from the term decentralized finance itself. And this has to do with all of the systems working through smart contracts instead of people or computers that are being controlled by centralized teams and so on. So those are some of the differences. There's a lot of differences also on the data side, which we perhaps can get back to a bit later. But what we do with Nansen is to help investors effectively surface the signal in all of this data, right? Because there's a lot of interesting data points you can look at with DeFi, which is different from traditional finance. You can go much deeper with transactional data, for example, in DeFi than you can in traditional finance.
Yeah, thanks for that. And back to you, Bobby. So we're hearing about explosive growth in DeFi. Like, how does one think about that? How do you measure it? I'm sure at CoinGecko, you've got a bunch of charts tracking this. How does one think about market momentum in DeFi?
So in DeFi, one of the most famous metric that is being used to track is this term called total value lock, TVL. It's basically the amount of money that is locked into a smart contract. And you must be wondering, why would anybody want to lock any or store any money on a smart contract? The reason is simple. It's mainly banks in a centralized manner source liquidity from depositors, and they take the deposits and they transform it into loans and lend it out to users. In DeFi, what happens is the function of a bank or a lender is transformed into a smart contract. So the smart contract needs to source liquidity from somewhere. So what happens is it sources that liquidity from people with capital who wants to put into a smart contract and lend out to people who wants to borrow this capital. So what ends up happening is the lenders and the borrowers are matched together on a smart contract, and this is basically the DeFi app that Alex was talking about called Compound, Aave, and Cream. So what we're seeing is that a lot of that's one example for lending. We start seeing the same thing, the same concept being replicated for decentralized exchanges and many other DeFi applications where the sources of liquidity is provided onto these things. So what we really want to track is one way to see how popular a DeFi app is to see how much liquidity has been locked in the smart contract. And one of the things that we aggregate on CoinGecko is the TVL metric, which we source from a couple of different sources. But that's one thing. A couple other things that people track in terms of DeFi tokens as well would be to see the market cap or the fully diluted valuation for all these different DeFi applications. I think DeFi as a sector has grown quite significantly in the past 1 year, that it's no longer fair to sort of compare all DeFi tokens in the same category. What one should really look at is to kind of look into the details of it. So you can't really take a decentralized exchange like Uniswap, SushiSwap, and compare the same metric against a decentralized lending protocol like Compound and Aave. For DEXs like Uniswap and SushiSwap, the key metric would be to look at the trading volume that is conducted on these exchanges, and then kind of look into it with regards to the TVL to see how efficient the capital is being deployed. And if you want to look at the token valuation with regards to the market cap and the fully diluted valuation. When it comes to lending protocol like Compound and Aave, the metric that you really want to track would be the amount of borrowing volume that is conducted, because the amount of borrowing volume would generate revenue for the protocol, which is then divvied up to the stakeholders, for example. So these are some of the nuances. There's a lot more deeper things that we can kind of go into it, but that's kind of a general overview of how things we track in CoinGecko, for example.
Yeah, thanks, Bobby. And what do you think's driving it? Like, nobody's getting any interest rates in any banks anymore. Is it that simple, or is it more nuanced when you dig into it?
Yeah, I mean, one of the factors that led to the high DeFi growth or the DeFi summer from last year was, I would say, the high yields being offered in the space. I mean, a zero interest rate environment for the past decade or so, everyone's sort of looking for ways to kind of grow their money, especially now when inflation's kind of is creeping in, right? So, on platforms like Compound and Aave, the last year, especially I would say the risk-free interest rate for stablecoins, USD deposits, was hovering around 30%, I would say. So compare 30% against 0%, that's a big difference for a lot of users. And this use actually what I would say subsidized, just like how Uber subsidizes rides to users to make it cheaper for users to ride on Uber. Use on DeFi are subsidized or through these liquidity mining programs or the yield farming programs that the teams have put out. So they distributed the tokens, so like Compound distributed COM tokens to anyone who deposit money. So that adds on to your yield or even to borrow money. So at some point, you actually get paid to borrow money on Compound. I think it happens now for Aave as well on the Polygon platform. So it's an interesting dynamic. So it's being subsidized rapidly. So as an early user, you get subsidized very rapidly. A lot of subsidy, and this sort of drive the demand for or the use case for DeFi in the early stages this year.
Yeah. And one last question, we would cut over the name in as well. So is it as simple as I'm a user, I've got some tokens, I go to one of these platforms, I stake them or commit them, and then I'm getting an interest rate back. So then I'm a yield farmer? Like, how do you explain it to the layman?
Yeah. So for example, on Compound or Aave, it's like what I would say, you just describe it as it is. It's kind of like you have money, you go to a bank, you deposit into a fixed deposit bank account, and then after 1 month or 1 year, you get like 3% back. But in DeFi, you get maybe 10% back. But on top of that 10%, so your money grow from $100 to $110, for example, you get this token from the platform itself, which can be used to govern the platform. You can use to vote on it, or you can kind of make decision on the protocol. But if you don't want to do any of these things, you can choose to sell the tokens in the market and convert them into a currency that you want, like a USD coin or Ethereum, and adds on to the yield that you get from using these platforms.
Yeah, clear. Thanks, Bobby. Naaman, over to you. Keen to hear about how you think about this. Obviously Coins has been in the market and a market leader in the Philippines for quite a while. How do you think about DeFi? How do you think about the current products and products you've been offering at Coins, and any sort of intersection and anything you can share or want to share with us today?
Yeah, thanks, Andrew and Bobby and Alex. It was great to hear from you both. Quite informative. What I would say is that both DeFi and FinTech needs to consider themselves as sort of friends. FinTech is basically trying to improve the existing financial services, and DeFi is basically building the whole new infrastructure from ground up. DeFi will innovate faster than the traditional finance, but it will be unable to do that without tapping on the modern FinTech features. Like one of the big problem that's, for example, coins.ph has been trying to solve is helping the unbanked population of Philippines, which is why the FinTech is needed there. DeFi will win over FinTech at some point of time, because as Bobby and Andrew said, that it's far easier to create new solutions, and by creating and combining new protocols. But this said, DeFi will need FinTech to remove any friction.
And so you've been straddling these markets for a while. So really a leader in that sort of, hybrid FinTech and crypto space as well. Like, is there anything you could share in terms of like, how you're seeing this playing out, especially for, like, as you said, your mission to serve the underbanked in Philippines? Do you see the mix, internally at Coins changing over time?
Yeah, I would say that there is a thought process and we are looking at, one of our long-term goals would be to bring DeFi services to our regular users. Now, these users might not actually be tax savvy, so they don't really understand what technology is running behind it. But the benefit of those services will be transmitted to these users. The key is how to bridge our e-wallet service to crypto, and that's the most important key over here.
And so, just following up on that, do you see a future where, the back end part of DeFi becomes abstracted away from many non-crypto native people? Like, surely, there's going to be a bunch of people that want to get into the details and, be able to see everything. But do you see a market opportunity where that gets abstracted away and people would just be able to get a yield? How do you see that playing out for your different customer segments?
Yeah, I do see that, and especially with the economy that currently we are looking at, I do believe that there will be a great opportunity for users to see that in future also coming on CoinsPH.
Great, thanks. So Bobby, back to you. I know you guys published an ebook recently, How to DeFi. Can you talk us through like what was the driver and any sort of feedback and overall reception?
Yeah. So we started embarking on our DeFi journey back in 2019 when there was no hype in the crypto sector at all. Everyone was kind of deep in the woods, building on their protocol. And what I would say is that not many people really understood what DeFi was. And so we kind of play around. It wasn't very easy to use all these things. So one of the things is, as we play along, we realized that how there was a big gap in the knowledge between the things that we know in DeFi and the rest who may not really know what DeFi is. So we thought we wanted to find a way to kind of bridge this gap and educate more users to get involved with DeFi. So we decided to embark on the publication of a book in March 2020. I think since then, there's so much changes that has happened and took place in DeFi. Back when we wrote the book, there wasn't even a compound token. There wasn't yield farming, low liquidity mining. And so much have changed that we actually had to write a new version called the and we're publishing the How to DeFi Beginner and How to DeFi Advanced books very soon. So the new version is coming up. The reception has been great. So that's why we kind of wrote the revised version soon.
Good to hear. And is that like coming back to the previous point, you're separating beginner and advanced. Is that like targeting, so one for crypto native, one for new to crypto? Like how are you thinking about segmenting these two books?
That's right. So like the beginner's book is more for like people who may have heard about Bitcoin and doesn't really know how to use, haven't really heard of compound, Aave, don't really know the concept. So there's a lot of step-by-step guides on how to use this platform for the first time. And the advanced book is more for crypto native guys who've used it before, but wanted to know a little bit more deeper on how this protocol works and some of the differences between these protocols, for example.
Yeah, great. I think that's great ecosystem development work, Bobby. Awesome.
Thank you.
Alex, back to you. Like, I'm not sure we completely covered it. Like, so we were talking DeFi, traditional Fi. Like, how do you see Nansen's role? Like, in the DeFi or broader ecosystem as well?
Yeah, so our mission is really to surface the signal in blockchain data, and we want to create winners in what we think of as the future of finance. So when we say future of finance, we mean basically a financial system that is blockchain based. And I think DeFi, as we've been talking about for a while now, is probably the best example of product market fit of blockchains that we've seen. And one major difference with traditional finance is that DeFi is what you could call radically transparent. So all the transactional data is available for anyone to observe. Of course, the difficult thing is to know who the different entities are that are actually transacting. And so that's the main value add that we have as a platform is that we have more than 90 million addresses that we've labeled up and associated with entities like exchanges, mining pools, venture funds, DeFi protocols, etc. And so the way we think about it is if we can help the pioneers that enter this space in becoming winners, that's going to make them reinvest more into the space. And it's also going to attract even more investors and users into DeFi. So it's a way to kind of contribute to the growth of the overall sector of DeFi and crypto. So that's kind of what our contribution is. And I think most people who start working with DeFi and using these different products, they're quite amazed by how much information you can get about using these different protocols. It's really a totally different world where the traditional finance investment makes it look like you're really in the dark. In traditional finance, you basically have market data, pricing, etc. if you're an average investor, but you don't have the deep insights that you can get from participating in DeFi and the blockchain ecosystem.
Yeah, great. All right, I think there's a lot of content there for people to, mentally unpack, so let's do this. Let's do all participants one quick question, rapid fire. So, what do you think is the number one risk or headwinds for DeFi as we move forward? Let's go back to you. Start with you, Alex. Yeah.
I think probably the main risk is that we keep going deeper down the rabbit hole, making things more complex instead of making things easier. And so it's not a risk that can't be mitigated. I think the key is actually to connect with the fintech section of finance, because I think fintech is building the front end and DeFi is building the back end. So if we can connect those two pieces, that's where it gets really powerful. But the risk is that the DeFi crowd will just keep going down the rabbit hole and making things even more complex and difficult.
Yeah, that's a good analogy you used. I like that. I do like a good fintech interface, right? And then,
yeah.
Obviously playing around with a few DeFi protocols as well. It's pretty technical on the back end, some of these platforms. Naaman, over to you. What do you think? Top risk or headwind?
I would, in my opinion, like one of the risk, or I would not say risk, but I would say one of the important factor that one should not overlook would be the impact of regulators and compliance issues. And what Alex said, actually, that actually helps in way where you can identify who are the senders and who are the receivers, and that's how things are going to be moving forward, especially in Philippines, when they have to implement the rules of FATF and the travel rule requirements. Actually, is going to make us to use protocol that we could see who is receiver and who is the sender.
Great. Bobby, closing us out on the DeFi topic.
Yeah, I think regulatory risk is one of the bigger risks as well. I think it's kind of an ongoing battle now. DeFi is not regulated at this point in time, so kind of a wild west. But I think DeFi is moving so fast, and as Alex says, moving deeper and deeper down the rabbit hole that I think regulators are really struggling to keep up to pace on the innovation of things, what's going on. So I think it's very unclear at this point in time, and situations very fluid on how regulators will kind of view DeFi. I really hope that regulators take on a progressive view of DeFi, because the innovation that DeFi offers can kind of take us really far on how things can be done in finance. Because DeFi is, as Alex says, radically transparent, it's more efficient, and it makes it more democratic for users globally. So I think that would be the risk, how regulators view DeFi, how they regulate DeFi, or if they want to regulate, or if they should regulate it as well in the first place, will be a critical risk factor on how DeFi will grow in the coming years.
Yeah, great thoughts there, gentlemen. So, moving on, let's get into all things NFT. So, Alex, can you explain NFT in simple terms? What are they? How did it start?
Yeah, so NFT is short for non-fungible token. And so fungible sounds like a very technical description, but effectively what it means is that each single token is unique. So unlike a currency where if you have $1 and I have $1, we can exchange it, that makes it fungible. There's no difference which one you have. NFTs, you could think of a house, for example. If you have a house and I have a house, we can't just exchange those two houses because each one is unique. And so where you have assets, where you need uniqueness, that's where NFTs are useful. And so you can think of game items, you can think of art pieces, you can think of digital art, you can think of collectible cards, virtual items. There's tons of things that you can use it for. And in fact, you could argue that the concept of NFTs is a bit like a pseudo category because it contains so many different things, right? You could think of actually certain insurance policies could be NFTs, right? But also game items can be NFTs. And so they're very different things. And it is possible to believe that NFTs are useful for one thing, but maybe not so useful for another thing. But that's how I would think of it. It's effectively about the uniqueness of each individual token.
Yeah. And let's double click on that and get a bit deeper then. So there's obviously a standard behind it, right? ERC 721. Could you explain and take us a bit deeper down the rabbit hole of NFTs?
Yeah, so essentially with ERC 20, which is the kind of standard smart contract template, let's call it, for normal tokens, or not the NFTs, but the tokens you'd normally trade on Uniswap and other dexes. there's no difference, as I said, between the different tokens. With ERC 721, you have that uniqueness where instead of you having just an amount of tokens, you have a specific ID for that specific token within a collection. So you might make, let's say, 10,000 crypto apes or 10,000 crypto kitties in a collection, and each one of those tokens will have its own ID. And so the ID is kind of the thing that separates it from other types of tokens, because each single token has its own ID. That's kind of how I would display it describe it in layman's terms.
Yeah, great. Thanks for that. All right, let's do a question for all. Quick rapid fire. Let's start with you, Bobby. Favorite NFT project? What you're buying personally and why?
I'm a fan of Hashmas. I thought like the project's interesting. There was a lot of when they launched earlier this year. There was a lot of interesting hidden attributes that kind of the community was going around trying to find these things. So I'm a fan of that. So I kind of follow that. But I mean, there's a lot of NFT projects out there. I'm sure like Alex and Norman will share. They are interested. They're interesting
Great.
NFTs. Yeah.
Yeah, great. Naaman, over to you. Your favorite NFT project?
It is. I'm not quite keen, to be honest here, but I would say that like some of the things that really take me back to my childhood would be some of the cricket-based NFTs coming out, and that might be quite interesting to think about.
Yeah, I've got a couple of friends that are lining up for the cricket NFTs. I think they're going to go ballistic. Personally, there seems to be quite a bit of demand. So yeah, nice one. And lastly, you, Alex, favorite.
I've kind of gone deeper and deeper down the NFT rabbit hole over the years. I would probably highlight Axie Infinity, which is a game where you can collect these different Axie kind of virtual creatures, almost like Pokemon, and you can battle them against each other, breed them against each other. There's actually a game for them. So I was an early backer of that project. I think they just crossed 1 million Axies that have been bred in total that exist. So that's a great project. It's currently, I think, the most used NFT project in terms of activity on the blockchain. And then I'd mention Pleaser DAO, that I'm a member of myself, which is kind of an art collecting, decentralized autonomous organization. So it's a group of art collectors, and we have purchased some iconic NFT pieces, including one by Edward Snowden, and also by Uniswap when they launched their version 3 of their protocol. If I can squeeze in one other category of NFT projects, I would probably say the ones that are focused on creating more liquidity for NFTs. So there are projects like NFTX, NFT20, and a few others. And what they do is they try to basket NFTs together, and then you can trade against the basket. And that makes the whole NFT collection more liquid, because you don't have to find the specific NFT. You can just trade against a basket of NFTs. So I think that's a really interesting trend as well.
Yeah. I want to come back to, you've mentioned something that, I think we should quickly explain, DAO. So could you quickly give us a layman's term on what is a DAO?
Yeah. So a DAO is a decentralized autonomous organization. In practice, I would say that this is kind of a digitally native organization. So it's an organization that lives on a blockchain. Typically, it involves having some kind of token, and the token allows you to have voting power on decisions. And so there's a governance component where you can, for example, propose votes, or you can vote on existing votes. And the autonomous aspect of it is that it doesn't really rely on anything else. It can self-sufficiently work through smart contracts and the human participants that are part of that network. So it's really just a way to think about companies or organizations that are digitally native and that have been kind of created on the blockchain itself.
Yeah, great. Hey, so Bobby, how does one track the whole NFT market overall? How do you guys think about that?
Yeah, I think that's an interesting question to ask, right? So NFTs, I mean, it's kind of like, how do you track the housing market as a whole, right? So there's a few different metrics that you can kind of use. You can kind of track like the most expensive house that has been sold in a particular area in a certain period of time. you can kind of, so that's the same thing. You can find the most expensive NFT sold. You can kind of find the cheapest house sold in that particular area during this period of time. So that's kind of the floor price for any NFT project. You can kind of think of the number of transactions of a houses in a particular period of time. So that's kind of number of NFT transactions during in the last 30 days, for example. And then you want to see whether this, so using these three metrics per se, right, you can kind of see like, has the number of transactions in this NFT project increased or decreased in the past 1 year, for example? Has the floor price increased or decreased over the past 1 year? Has the maximum price increased or decreased? Has there been more buyers into the marketplace, or has it been more sellers in the place? And you can kind of see number of unique holders from the addresses. So ideally, a project should be spread out to more NFT address, more holders, more addresses, instead of being hoarded all by one particular user. So you want to see how decentralized the project is. So yeah, these are some interesting projects as well. I think Alex brought up some interesting points about NFTX and talking about fractionalized NFTs and basket, putting them together. The problem with NFTs is that they're all unique. The liquidity for NFTs are really low. So what people have done is they sort of like fractionalize some of the NFTs, a really expensive piece, like say, or they put together a few different NFTs into a collection and then kind of issue tokens on top of it. I mean, to a certain extent, it's sort of a securitization of these NFTs. And once you can start trading fractional amount of it, like, I mean, $10 worth or $100 worth, you start seeing more liquidity and the real price, if you want to say, because there's more transactions going around for all these NFTs. So then you can start looking at, for fractionalized NFT, you can start looking at the trading volume for these NFTs and some of the market cap and compare them against each other's.
Yeah, great. Thanks, Bobby. All right, steering towards wrapping it up. Like, you know, where do you all think NFTs are going? Like, what's the future look like? Let's close out with you, Bobby, and we'll work through.
Yeah, I think NFTs, they're a collection of different items. Can be art, can be game items, can be digital land for scarcity. There's a lot of things that NFTs can do. I think we start seeing the financialization of NFTs as well. We start seeing Uniswap, a decentralized exchange, issuing NFT tokens to represent your liquidity position in the exchange. So I think there's a lot of things that the NFTs you can kind of imagine the future where you can kind of represent software licenses as NFTs as well. So there's a lot of applications. I think we're just scratching the surface at this point in time. A lot of things are at this point in time just mainly art and gets a lot of headline, but I think it'd be interesting to monitor how things progress in the following years.
Yeah, great. Naaman, like any thoughts on where we're at in NFTs and where we're headed?
I do agree with Bobby. It's scratching the surface, and it's too early to say which direction things can go through. For me, it's always something to see how eventually things might realize for people who are holding these NFTs, considering that how they will be treating it in terms of their own taxes and regulatory purposes, and that is going to be a key component also of how this actually evolves.
Closing out with you, Alex. Any thoughts?
Yeah, I think maybe there are two specific applications that I think we'll see very high growth in for NFTs in the near future. The first is anything that has to do with a kind of creator economy. So you haven't really had the chance to make bets on artists, you know, in the past. Like early artists who are creating interesting things. Could be music, it could be, you know, digital art, right? It could be fine art, it could be lots of different things. Now you have a way to actually back them financially and also bet on their success by owning their pieces. So I think, and that's a really broad area actually, if you think about it. You know, bands could issue NFTs, etc., and you can actually pick them up if they have scarcity. The other very interesting area is everything that has to do with virtual reality and gaming. So I think the metaverse is going to be real. Like that's just going to become a bigger and bigger sector in the economy, where people are increasingly kind of living in these virtual worlds, you know, through gaming, but perhaps also over time in more professional settings. And so, as Bobby was saying, like digital land, virtual items, even creatures like Axie and so on. I think that's a really huge area, and probably an economy that's going to just keep booming.
Yeah. And can you mentioned something interesting there, the metaverse. Can you give us a crisp definition? Like,
I don't really have
how much time do you spend in the metaverse?
I mean, I think we all, to some extent, are like slowly going into the metaverse through social media, and even now we're having this panel online instead of doing it in a physical room, right? So I think slowly we're getting into more of a virtual reality type world where the digital becomes increasingly important. To me, the metaverse, I don't have a crisp definition, to be frank, but to me it's about effectively having kind of like a mirrored world or a new world that's online and that feels immersive, where you can have items, you can have an economy, you can have real estate, etc. Like, that's what I think of when I say the metaverse.
Kind of like a digital twin type world.
Yeah, pretty much. But you could have several twins, right? Like avatars in different worlds and so on through games, etc.
Great. Well, we covered a lot of topics here and a lot of content here today. DeFi, NFTs. I want to thank our panelists for coming along, Bobby, Naaman, and Alex. It's been really informative. We powered through a lot of ground, and I want to thank everybody for tuning in and listening. And there's a ton of other content available on the Fintech Forum. So please check out the other slots and log into anything that's relevant for you. Thanks a lot, gentlemen. Appreciate your time.
Thanks very much, Andrew.
Okay, all right. Thanks for that insightful discussion, guys. And to the folks in the audience, once again, we appreciate you being here. And we hope that you've been learning a lot of stuff from the session so far. For the next session, it's another panel discussion. This time, it's about why security and compliance matters. And we'll be hearing from Alejandra Artigues, Security Solutions Architect at AWS, and Victor Liu, the CTO at Xverse. The session will be moderated by one of Tech in Asia's own, Simon Huang, who is a writer at where I work, basically. So stick around and I'll see you there.